Give a brief introduction of Mr. R. Muralidharan, Deputy GM of Bank of Maharashtra.
Deputy General Manager. His current profile involves constant communication with Treasury. He leads and manages a big team which handles financial functions like review and investment policy, monitoring the investment function of Treasury, investment of superannuation funds such as provident funds, gratuity funds, pension funds, all matters concerning taxation, income tax, service tax, etc. Ensuring maintenance of SLR, CRR by the bank as per RBI guidelines. Finalizing the audit terms for statutory audit of quarterly as well as annual results of the bank. Sir is the recipient of National Merit Scholarship of Government of India. After first degree and recipient of fellowship from National Council of Agriculture Research. He is a certified associate of Indian Institute of Bankers. Sir will take us through various aspects of banking system in India, which is one of the backbone of Indian economy. Sir, we will request you to please come on stage and enlighten us. Please.
Respected guest of honor, Subramaniam sir, my dear students, it's really a great pleasure for me to be here. At the outset, I thank the IIMS Institute of Management for inviting me for this excellent occasion of the annual event, Ekayana. But when I entered the premises today, I was very much delighted to see the beautiful arrangements made and also all the students here in the college uniform. It's really a very, the first impression itself was very great, and I really appreciate the efforts put in, and I am very happy to be associated with this event. In fact, I have been looking after the risk management department of the bank for the last 3.5 years. Recently, I was given the charge of the financial management department. I have you can say, passion for risk management. So my topic that I will be covering will be the risk management in the banks. I frequently visit other institutions like NIBM also for their very lectures on the subject. I will try to confine my lectures within the time given to me and also with set minutes for questions. You need not note down anything, you can only listen to this, and at the end you can pose some questions. It's all only the what I have given in this PPT is only what we have been doing in the bank. Though this is a risk management concerning banks, this will be like a model for any organization. The risk management could be on similar lines depending upon their business. So let me start my presentation. You all know what is risk. Risk is unexpected. Whatever is unexpected event, that is what is risk. Risk management means you cannot avoid risk. You have to take risk, but you can always take calculated risk. Risks have to be taken. And risk management is a process by which we identify the risk, we measure the risk, we monitor the risk, and control the same. This is what is risk management. In fact, whenever I go for talking on this subject, I always try to collect some good material on the subject. I came across, I stumbled upon one beautiful sayings about risk. I hope you will enjoy. This one, when I presented everyday presentation to international students in NIBM, they were very much happy about it. In fact, they gave an applause. So that encouraged me that I should share in every presentation what is the famous American author's view about risk. I will read this one slide only by you. To laugh is to risk appearing the fool. To weep is to risk being called sentimental. To reach out to another is to risk involvement. To expose feelings is to risk showing your true self. To place your ideas and your dreams before the crowd is to risk being called naive. To love is to risk not being loved in return. To live is to risk dying. To hope is to risk despair. To try is to risk failure. But risks must be taken because the greatest risk in life is to risk nothing. The person who risks nothing, does nothing, has nothing, is nothing, and becomes nothing. He may avoid suffering and sorrow, but he simply cannot learn, feel, change, grow, or love. Chained by his certitude, he is a slave. He has forfeited his freedom. Only the person who risks is truly free. When some student was asking about the question to Subramaniam sir on Facebook, he was also telling, you have to take this. In fact, in banks, for taking any risk, everyone, it cannot be left to any individual. So there should be a policy for the bank. So there is a risk management policy in every bank. Similarly, there is a lending policy and loan review policy. There is asset liability management policy, and there is a business continuity planning policy. These policies are very important. These policies are there in every bank in India and abroad, and as per Reserve Bank of India guidelines, all these policies must be in place, so that based upon the policy guidelines only, all the units of the bank, all the branches and offices of the bank will be operating, so that the risks are all properly defined and the limits are all defined, and all will be operating within the policy guidelines. Again, as Subramaniam sir was mentioning about Peter Drucker, I also have a quotation from Peter Drucker. You all know he's a management guru. He has said, this applies to all businesses. Any business should identify all the risks that the business and classify them into groups. The risks that you can afford to take, the risk you cannot afford to take, and then do not take the risk that you cannot afford to take, and do not fail to take the risk that you can afford to take. In fact, there are in banks also we find, not only in our bank, many banks, the people, the risks which they have to take, they are hesitating to take. It means when you hesitate to take risk which you can afford to take, then you are losing a very good opportunity for business. So that is why in this area, all the businesses have to concentrate that you should not miss out taking any risk which you can afford to take. Then as far as banks are concerned, the risk tree goes like this. We have balance sheet risk and also delivery risk. In the balance sheet risk, you have the credit risk and market risk. See, in the credit risk, there is a default risk. The client to whom we give the money, he may default in repaying our the principal amount and also interest. And in respect of market risk, the particular portfolio itself may deteriorate over a period of time due to market conditions. So that's the portfolio risk. In respect of equity risk, you are all aware that the equity, when the Sensex was once upon a time 9,000 and then now it is 18,000. So depending upon the Sensex, the equity prices also change. So you have the equity risk. Then similarly currency risk. Similarly the Indian rupee versus dollar. Once upon a time it was 39 rupees. It came as high as 50 rupees. So this is the foreign exchange currency risk. Then liquidity risk. The banks have a lot of deposits at some point of time. At some point of time, due to a lot of rate expansion, there is a shrinkage in the liquidity. Then the interest rates raise. The banks raise the interest rates to get more and more of deposits. So this is a liquidity risk. The interest rate risk. Again, the interest rates keep on changing in the market depending upon the liquidity position. So these are all the balance sheet risk. Then on the delivery side of it, whenever the services are delivered through the branch offices, there is a lot of risk, operational risk, then legal risk and technology risk. In fact, you all must have somewhere read about the Basel II, implementation of Basel II guidelines for revised capital adequacy framework in India. So in India, all the banks, all the foreign banks operating in India and also all the Indian banks have already migrated to Basel II norms, and in this, the operational risk for the first time, the banks are required to keep the capital for that. So